This is Rod Kusanen, Spooman for Risk on October 9th, 2009. Our video for today is going to focus on the future global market crash of 2009. We have put out several videos on this subject, and we are going to address an objection to some of the data that we had reviewed pertaining to the VIX in one of our original videos. As we mentioned in the previous videos, we show a gap at 71.63 and 48.40. We had a few subscribers who checked their data on the VIX and concluded that they did not have a gap. We looked into this matter. We took it very seriously, and we appreciate those of you who did in fact call this issue to our attention. The bottom line of the situation is the gaps remain. We contacted both TradeStation and the CBOE. It was an interesting discussion with TradeStation. I'd like to take a minute to describe to you the nature of our conversation with them. TradeStation uses an algorithm for the purpose of verifying whether the current data off of whatever data stream they happen to be running is consistent. If the value of the current bar, particularly the high or low of the bars, falls outside the realm of their algorithm, they consider that this particular piece of data is spurious. Therefore, they will reissue the high and low of a bar based upon what their algorithm washes out. They do not necessarily go back to the data vendor, or pardon me, the originator of the data, in this case the CBOE, and verify whether the CBOE agrees. The CBOE sends out raw data. Now here is the original reply that we received back from TradeStation regarding the two dates in question, both March 9th and November 21st. Now, they did a tick-by-tick examination of the data on 3/9. The conclusion is that data is correct and it's accurate. But on 11/21, this is the data that came back from the CBOE. Right here, at that particular time, the raw data from the CBOE did show the VIX low of 68.41. What TradeStation published was quite different, and they indicated that that particular drop of 8.96, based on their algorithm, required them to filter that from their charts. Bottom line, they came back and said, based on our filter and our algorithm, our daily low will not change. We objected to that and said, look, you may have an algorithm that will filter raw data, but until you confirm that the raw data is in fact erroneous, you're arriving at a conclusion that's based upon nothing more than math. You need to go and take this a step further. Go back to the CBOE and get them to do their own research and determine whether the raw data that they sent does in fact remain correct or needs to be adjusted. So we successfully got TradeStation to go back to the CBOE and put them to the test. Here is the actual response we got back just yesterday from TradeStation and the actual email that came out of the CBOE. John Hyatt, Director in Research and Product Development for the CBOE, responded in these words: a customer of TradeStation, that's us, noticed a possible bad tick of the VIX on 11/12/2108. I checked the VIX history and confirmed that the value of 68.41 on 11/21/08 was a bad tick. This affected the low price of the day, which should now be 71.63. And would you forward this correction to other vendors? How about that? 71.63. Those of you who called us and questioned whether this number was correct can now rest assured it is correct. And the CBOE has confirmed it. So as we stated in the past, friends, I hate to say it, 48.40, 71.63, that's your future. When this is going to happen, we don't know. But technical indications once again give us strong reason to be on guard that this market is poised to begin to sell off. We are clearly one of many who are saying the same thing. If you want to know some of the more reputable ones, review our video from times past. If you look at the DPO, what's happening? We haven't dropped below these lows just yet. We're getting close. But the fact is, the DPO is continuing to be more and more divergent. There are no gaps below the present prices, but there are gaps above. Now, that having been said, if all you're out there to do is just protect your profits, by all means do so. But there is a play here, a very, very good play that could be executed as this market crashes. Perhaps we will make that the subject of another discussion. This is RSKsys Intl for Risk.